What's up, everybody? My name is 𝐔𝐘𝐒, and welcome to Making Finances Sexy. I'm your rent rave owned realtor and certified instructor with the company 101 Financial right here in the Valley of the Sun. It is my mission to help you transition from renting to homeownership, no matter your situation. I'm ready to be your personal finance coach and first-time home buyer specialist. And with me is Rose Short.
Hey guys, it's me, Rose Short, aka the Red Queen. Come down the rabbit hole with me. I'm a realtor here in the Phoenix Valley, as well as CEO of Kronika Luxury and a financial consultant. It is my mission to help you build multiple income streams, fire your boss, live your dream lifestyle, and really just live your best life.
Woo. And today I'm excited to get into our mortgage pre-approval secrets, unlocking your guys' path to homeownership, because that mortgage
Yes.
pre-approval is the first step, unless you have enough cash, of course, to buy a house. But in this day and age, whew, you gotta have a lot of money.
Yes. Yes. And you gotta check your state, because some require pre-approval, some only require a prequal. So know what you need.
Absolutely. So let's get into it. Understanding the importance of a pre-approval. So it gives you a competitive edge in the housing market. It shows sellers that you are completely serious about the home purchase. So that can be really helpful to show when you're about to put in an offer on a home. It also helps you determine your budget and affordability, and it streamlines the home purchase process.
Yes. Yeah, a realtor should be able to help you with all the legalities, but some states do not require pre-approval or a prequal with an offer. Some states do. Some, again, require prequal. Some others require pre-approval. So that is where a realtor could really come in handy.
Definitely. It can save you time on researching it all yourself because a real estate professional already knows what you'll need. And that can take a lot of the stress off of you and your busy life. A lot of people don't even think about doing it because it is a lot of work and a lot of information and things like that. So for the people that think they can do it on their own, maybe swallow your pride a bit and get some help.
Yes.
So the pre-approval process, to explain it, you'd want to gather all your necessary financial documents. The lender you work with will need to know your income, your assets, your credit, and then you want to understand your credit score and how it impacts your pre-approval. Credit is pretty important getting any type of loan. So understanding your credit, checking your credit score, not all the time, but at least a little bit regularly. You can also check your credit report for free, and I'll post a link in the description, like annualcreditreport.com. Check your credit report, see if there's anything that doesn't look right, and you can dispute it, and that can help increase your score. And the higher your score, the better chances of the best pre-approval you can receive. So credit is super important. And determining your debt to income ratio. If your debt is way higher than your income, chances are you won't get a pre-approval, or you'll get one that you're not very satisfied with. So working to pay down any debts you have before speaking to the lender and going through that whole process is also very important. So debt to income and your credit, make sure you know both.
Yes, and you can shop around for mortgages to get the best mortgage rate from different lenders, but keep in mind you only have about a 28-day window for that. So every time you apply with a lender, they are going to do a credit inquiry, which will drag down your credit score. So if your plan is to shop around, do it early rather than later. And then also remember, once you have that pre-approval in place, don't go too crazy paying down debt, because then it starts to look a little suspicious of where's the money coming from. And your lender or real estate agent can also help you determine, what to pay down and what not to pay down. And then the main thing too is don't open any other credit lines from the time that you do that first initial pull to until you've closed on your house.
Yes. I had that almost messed me up. So I applied for a new credit card when I was in the middle of our home purchase, and the lender we were working with, he noticed right away. He's like, "What's this? What's this credit line?" And I was like, "Oh snap. Yeah, that was me." I wasn't really thinking of it at the time. I was just, it was a Fidelity credit card. So when I use it, it goes to my investment account, and I was all excited. And then I was like, oh man, what did I do after I submitted the application? It didn't, it wasn't a huge issue, but be more mindful if you are in the process of buying a house, and do not open any new credit lines until you're done and in there.
Yes.
So there's also other potential roadblocks when you apply for a mortgage pre-approval and say your job changes or you have income fluctuations. You need to explain to your lender and show a stable and consistent income, even if it comes from multiple sources. That was like a huge roadblock for Kalani and I. Kalani's income is sort of commission based. It's called flat rate in the automotive industry. So he only gets paid per job. He's not like clocking in and getting a set hourly rate. So they looked at him like commission. So he had to get a letter from his boss just explaining their pay, like how he gets paid. And then he had to show that he does get paid consistently. It's just different, if that makes sense. It's a lot, guys. This whole process has been a lot, but having a lender that understands your unique situation is really helpful.
Yeah, and this is also where it goes back to what we were talking about last week about building your business while also working that 9 to 5. That 9 to 5 income might be, if you're trying to build your own business and buy a house about the same time, you want that 9 to 5 income, because you don't want to apply for your house, 3 months after you quit your job. And yeah, you're making income, but it's not necessarily predictable yet. That's going to really scare off a lot of lenders. So you can use that 9 to 5, even if your business is bringing in enough money that you think you can quit, get the house first.
Yep, that was the complete predicament I was in, because I had a large gap of just freelance working, and that didn't really count for my pre-approval. I had to focus on my 9 to 5 job for 2 years. 2 years they're pretty strict on. I don't know if it's just Arizona or if it's everywhere, but in Arizona, they're really strict on that 2 year job history, because I was just coming up on my second year. I was 2 months away, and they were kind of pushing back because of that. But definitely utilize a W-2 job if you are working towards that goal of buying a house, because it just seems to be a lot more difficult if you're just showing your own business income instead of that.
Yeah, especially if it's in its beginner phases.
Mm-hmm. Yeah. And then always clear communication with your lender is very important. You want to be honest and open about your situation. And another thing is, if you're getting gift money from somebody for your home purchase, they need documentation for that as well. So it's called like a gift letter. Whoever's sending or wiring some money over to you, make sure it's it's clearly stated that they're gifting you the money and you get that to your lender. Because like Rose said, any weird deposits or things getting paid off quickly, they tend to flag, and that can cause some delay in when you're house hunting and whatnot.
Yeah, essentially they want to make sure that, the money is coming from a reputable source and it's not a money laundering scheme or anything like that. And that's one of the reasons that it goes through that. Now, one thing that I think a lot of people don't know is you can still get a loan for a house if you have zero credit, or if one of you has bad credit, but that person also has really good income. You can ask for what's called a manual underwriting, because the underwriters are really the ones who are going to have issues with anything that comes through their desk. Like, they're the ones who make sure that everything is up to snuff and that there's not any, corners being cut or fastballs being thrown. But you could ask for a manual underwrite if, let's say, you have a good chunk of cash, you have enough cash for the house, or you have a really good, chunk of money for the down payment, and you have a really good steady job that you've had for the last 5 years, but you just don't have credit. A manual underwriting can help you get the house. So it's possible with bad credit or no credit to still get a loan. It's just easier if you already have credit, and especially good credit.
Yeah, just as it's also easier if you work on saving up a good size down payment. Getting a mortgage pre-approval, you can, yes, there's programs out there to have zero down, or Kalani and I, we've just put 3.5% down, which is awesome and really doable. But if you can work on your personal finances and have a savings plan, which I would love to help you with, we can just save up a good sizable down payment, because that makes the process a lot smoother, and you can have lower monthly mortgage payments and a lot of benefits when you save up first and then go after your house.
Yeah. And one thing that's really important to remember that, again, I think it's overlooked a lot, is figure out what you are comfortable paying per month and communicate that to your lender, because you might be pre-approved for significantly more than you want to buy. And it's super important that both your lender and your real estate professional understand that, this is my absolute highest that I'm going to pay per month.
Mm-hmm.
And that is what we need to find me. Because so often we see it where someone has a really good high paying job, and they get into a house that they can relatively comfortably afford. And then a year later, they lose that job for whatever reason, right? Because job security is not a thing in this day and age. And then all of a sudden, they're in a tight spot because what was fairly affordable before is now not at all affordable. So make sure that you are staying within the realms of your comfort zone. Don't just get pulled into well, I can afford this much house, so I'm going to buy this much house. Really figure out if you need that much house or not.
Yes. So I personally went off of like what I was paying in rent currently, and then took a look at my projections or my finances and tacked on, a couple $100 from what I was currently paying. But you guys also got to think about, this is a home purchase. If things break, you're going to have to fix them. Or if you get into a house that needs a little bit of work, you're going to have to pay to put in that little bit of work. It's just more responsibility, but it's totally worth it, in my opinion. It's just being smart about budgeting yourself for it and making sure you're not overextending yourself.
Yeah.
And then, so maintaining the pre-approval, you want to keep your financial information updated at all times, because the process from when you get your mortgage pre-approval, it could take weeks, it could take a couple months until you finally find the house that you're ready to go after. So what I was doing was as time went on, I was updating and saving like my new pay stubs into my computer because the lenders will ask for it again right before closing and things like that. So make sure you just keep updating your financial statements, your assets, income, all that good stuff. And when they ask for it, you need to understand that there is timelines and we have to act quickly when we're trying to find a home.
Yeah. And again, be aware of the difference between a pre-approval and a prequal, right? So a prequal is quick and easy. They don't ask for a whole lot of information because they're just basically going off of what you're telling them and saying, okay, well, based off what you've told us, this is your risk position. This is what we think that you're going to be qualified for. The pre-approval means it's actually gone to the underwriters. The underwriters have looked at everything and said, this is for sure what you're qualified for. So your pre-qual can sometimes be higher than your actual approval, depending on what you've told them, or you can get a pre-qual but not get approved because your documents don't line up with what you originally told them. So it's super important that you guys understand the difference of those two. You can ask for a pre-approval versus a pre-qual in the very beginning. But again, you need to remember that as rates fluctuate, most of the time those rates are only locked in for a month. And the interest rate, when everyone was going crazy about the interest rates going up, it's all based on your risk position. So it was impossible for us to tell people, like, yeah, you're going to be paying 7% because we didn't know their risk position. So keep in mind that just because the national average is 7.2, I don't know if that's what it is at the time we're recording, I'm just throwing out numbers. You might still be able to get, a loan for 6.5, depending on your down payment, your risk position, your debt to income, all that kind of stuff. But this is all conversation that needs to be had with someone who really knows what they're doing and can understand your situation.
Yep, absolutely. So, I mean, I guess that's kind of all I got on this topic, but just remember, guys, get to know your credit score, get to know your debt to income ratio, speak with a lender. It doesn't hurt to, start getting some information, letting them know what your situation is or what your goals are. If buying a house is one of your goals, definitely recommend reaching out to a realtor. Everyone knows a realtor, I'm sure. It seems like. Or
yeah.
Reach out to me or Rose. Like, we love to help and give whatever advice we can. We also have great referrals. So there's just lots of people out there, information you can grab out there, different loan programs. It can get overwhelming, but having the right people in your corner makes it a lot less overwhelming and make sure you're on the right path that's suited for you and your goals.
Yeah. Yeah, and there's tons of loans out there that aren't even advertised, right? So you've got, depending on where you live, if you're in a rural enough area, you get a USDA loan, which is, again, basically a zero down loan. You can get tribal loans. So if you're a member of the tribes, there's specific tribal loans. There's just a lot of different options beyond VA, FHA, and conventional, which are the most talked about ones.
Yeah, exactly. So just don't be shy.
Yes.
Because that's how like Kalani and I were. We were just like, frick it, let's just submit our stuff and see what happens. And then we made it happen.
Yep. All right, that I think about wraps it up. Next week, I want to go a little bit further into if you're starting your business, how do you choose the best social media platform to start with?
Ooh, I like it.